Well, the cost of government borrowing continues to rise globally, sparked by the incoming German government's decision to pivot away from a long-standing policy of fiscal conservatism to spend record amounts on defense. The decision by Germany, which is the world's third largest economy, reverberating across debt markets in Europe and Asia. Trent Murray has more from Berlin.
We are witnessing the biggest jump in German bond yields in 35 years. The last time there was this much volatility was 1990, at the time of German reunification. The cost of government borrowing has risen after Friedrich Merz, the man expected to be the next chancellor following his recent election win, announced an enormous spending program for the country's infrastructure and defence. Over $500 billion will be spent on infrastructure, and constitutional changes are planned to make defence spending exempt from the country's so-called debt brake, which limits how much the German government can borrow. With Europe's biggest economy now signalling it's about to release its financial firepower, bond prices have fallen. Bond prices and yields move in opposite directions, meaning that yields climb higher when the value of the bond falls. The fall has seen the yield on the country's main benchmark 10-year bond skyrocket, making the cost of borrowing for the German government much higher. This could make for some difficult choices for the incoming government. Servicing higher volumes of debt at higher costs could place even more pressure on the German budget at a time when the country's economy has already just experienced 2 years of contraction. But it could also be argued that the debt-funded increase in defence spending could boost economic activity at a time when an upcoming trade war could hit external demand, though inflation could also rise. And there are signs the sell-off of German bonds is having a ripple effect on global debt markets. Japan's government yields have hit their highest level in more than a decade, with yields also jumping in Australia, New Zealand, Italy and the UK. Trent Murray, CNA, Berlin.